as a portfolio manager at his school's, one of his school's student investing clubs. So to kick off our conversation, I would love for all of you to tell us a little bit more about yourselves and how you first got interested in investing in the finance world, and to frame our conversation a little bit, a piece of information that we recently found that I think is really relevant here, is that we recently surveyed just over 3,000 adults about their experience with investing, and over half of them told us that they didn't learn about investing until after they had graduated from college, and just about a quarter weren't 30 until, or didn't learn about investing until they were 30. So you all clearly have a little bit of a head start, and so would love to hear about what sparked that interest. Alana, do you want to kick us off?
Sure. Okay, so I am Ilana. I graduated, as Willa mentioned, a few months ago from Tulane, and I studied computer science and psychology. And kind of one of my biggest projects is Rooted, which is a financial wellness newsletter and community that I started specifically for college students, and now I'm out of college, so young people as well, anyone who's kind of in that age range. And I just love, I mean, a big reason why I started it was because I really love coming up with creative ways of kind of breaking down these really intimidating topics. And I think there are a few things that are, as intimidating as maybe getting started investing when no one has ever talked to you about it, and that's never been a focus in your life. So that's how I started.
Yeah, we definitely,
why I started.
We definitely hear a lot of people feeling like they wanted to start and they just didn't know where to start, and that intimidation piece I think is pretty common for many folks. Alejandro, do you want to go next?
Yeah, absolutely. Hey everyone, I'm pretty excited to be here. So my name is Alejandro, currently a rising senior at UC Berkeley. Kind of had a little bit of a non-conventional path going into finance. I'm currently studying industrial engineering. Definitely had some interest in the markets and investing in general in high school, and I definitely wanted to explore that in college. So I ended up joining the investment club at Berkeley, which has been a great experience. I mean, I learned everything from how to really form an investing thesis, and anything from like financial modeling and basic accounting stuff that I wasn't necessarily taking in my classes. And I think what I really like about the group was that we really had this nice space to share a lot of this financial information and get these conversations going, which as you guys just mentioned, they can definitely be a little bit intimidating at the beginning. So it's great to, I'm definitely passionate about personal finance as well, and I'm happy to like share my experiences so far as well.
Awesome. And Sarah, you're in a financial, or the women's business group on campus too, so would love to hear about how you got started and interested there.
Yep, so I think my interest kind of started from an entrepreneurial lens. When I was younger, my sister and I opened a business, and I kind of learned, I think, inherently that there is an aspect of financial like investment and wellness that goes into the business world. So when I got to Columbia, I joined, similarly to Alejandro, Columbia's largest hedge fund. And so that was a really great kind of introductory experience to investing. I don't think without Lion Fund, I would have learned about an investment thesis, how the stock market works, especially like at 18. And so having that introduction actually made me realize this is something I want to pursue, which is why I'm doing financial economics as my major, because before that, I really didn't have a comprehensive understanding of what it really meant to go into like the finance world and investing. And now it's led me to becoming president of Columbia Women's Business Society. And obviously this is a society that's much more broad. We're focusing on the business world as a whole, but something we've just seen commonly through the women we work with is that personal financing and investing isn't something that's not as readily spoken about. And that's something I definitely want to remedy. So through Columbia Women's Business Society, we're launching new initiatives to just talk about investing, what it is, have introductory conversations about it. We're actually doing a panel with public about financial literacy, and it's been really great. And the response has been so incredible to see that people find it really valuable and are learning from it. So yeah, that's kind of just a bit about me.
Awesome. Yeah, I think one of the things that I've seen through spending time on public and with our community is how much of a role understanding the businesses that you're investing in plays in feeling confident in investing. So definitely see the overlap there. And last but not least, Howie, you want to tell us a little bit more about you?
Yeah, sure. Thanks. Happy to be here. So a little bit about me. I was kind of a late bloomer to like finance and investing. I didn't really know too much about it before I came to Stern. And I'm lucky because like Stern being in the city, there's huge like awareness among the student body about finance, the world of finance. So like Alejandro and Zara, I joined a club, QFS, Quantitative Finance Society. That's been one of my biggest involvements on campus. And we're, just students. We do investing for fun. People look at like stocks, but also all different kinds of like asset classes. We have like a macro portfolio team. We also have like long short equity portfolio team, which I was most recently the portfolio manager of. And yeah, I definitely agree. I wish like maybe in high school or even earlier, I had like more exposure to personal finance and investing. So definitely that's something I want to be a part of going forward.
And as you all have learned about investing at different times and in different ways, I'd love to hear about how you formed your own investing strategies and what you're looking for when you're deciding to make an investment. Alejandro, do you want to kick us off here?
Yeah, sure. I can share a little bit about. So I've managed two of my own portfolios, and I would say both of them have very different strategies. One of them being more of an active strategy, and the other one being more of a passive strategy. On the active side, basically what I mean by that is buying individual securities, qualitative companies at a good discount. I get super detailed with those analysis, and for me that basically comes down to building financial models, coming up with different valuation techniques depending on the industry or the company. And as you can imagine, it definitely takes some time and some practice to get it right. Every single input that I put into this models or every assumption that I make, I really make sure that everything is at least probabilistically plausible or really well researched. So this strategy is definitely for people that are very into investing and have a little bit more exposure to the markets. But my second type of strategy, which is more of a passive way, is the one that I really recommend to a lot of my friends and anybody in general that really wants to get into investing. And by passive, I mean instead of buying like individual securities, you're buying into a bucket of stocks, right? In this case, an ETF or an index fund. And that immediately diversifies your portfolio, reduces a lot of that risk exposure instead of just having all your money in a couple of stocks. It's super low cost, so that's great for us as young people and college students. I mean, Vanguard and Fidelity are putting some of the lower cost ETFs out there with some of the lower expense ratios. And especially if you pair this strategy with a cost average approach where you're basically investing the same amount of money, let's say every month or every 2 weeks, that's great for you as a passive investor because you don't really care about what the market is doing. People are busy. People don't have the time to be keeping up with what's going on. So if you're buying consistently every month, at the end of the day, you're buying in the ups and downs of the market, right? So that's going to average out in the long term. So that's a really powerful tool. And as young investors, one of the biggest assets that we have, and I can't stress this enough, is time. The longer our time horizon is, the more we can really compound our investments, right? So that's why if you can get as early as you can, that's even better. And the great thing about ETFs is, as Howie mentioned, like it's nice to really get exposed to different asset classes as well, not just equities, right? So my portfolio in that ETF sense is not only like small, mid, and big cap companies, but also like other alternative assets, whether that's commodities, gold, maybe even cryptocurrency as well. If you're interested in real estate, but maybe don't have the money to be buying a property, you can always be buying a real estate investment trust, right? And if you even want to diversify further, like you can always go for the international stocks, maybe buy an emerging market ETF or a developed countries ETF. So there's so many things you can do. And it's the great thing about this strategy is that it's very simple for us as young investors that are starting to get into the market. And I think what we really have to be cognizant about, though, is that you have to really be patient. And that's something that I feel like a lot of our generation struggles with, me personally as well. We grew up with things just being handed to us really, really fast. I mean, we get annoyed when the internet starts being a little bit slow, right? So this strategy is not a quick get rich strategy. Like, you have to be patient, but if you're diligent enough, if you're investing responsibly and putting in the money every month, like, I guarantee you, like, in 5 to 10 years, you'll definitely see some great upside. So yeah, that's kind of my 2 cents on that.
Yeah, I heard, I think this is a pretty common saying, but that time in the market is more important than timing the market. And that's something that I try and remind myself when I'm trying to figure out, is today a good day to put money into this ETF or stock, and realizing that it's a longer term game. Zara, do you want to speak to your investing approach at all?
Yeah, for sure. I think Alejandro did a really good job of kind of like outlining, I think, multiple approaches people can take. So I kind of want to, I guess, like scale back and think about the introductory stages when you're really trying to figure out what this all means. From like a beginning stage, what was really helpful for me was looking at companies that I understood. And when I say that, I mean, the first company that I like kind of pitched as a part of the interview to Lion Fund was Ulta. And so then, no, obviously coming as a consumer from Ulta, it was easier for me to understand from a financial perspective, how am I like trying to understand this information? How am I synthesizing the information I can see in the growth of Ulta with like the financial analysis? And then even after that, I kind of focused on Shopify, because Shopify is the platform I actually used to manage the clothing line that I had mentioned I started with my sister, which actually began my entrepreneurial journey. So in an interesting way, I think when you choose companies that you have an understanding of, it just makes the approach of investing that much easier, because I think it's intimidating to think when you, at least from like the people I've heard speaking about this, when it comes to just like starting and investing, I think people can get intimidated by the types of companies that are spoken about, but there's a whole sector of like consumer and retail. And from my experience, a lot of people just don't like think that that's a huge aspect to investing, especially from the women I've spoken to at Columbia Women's Business Society. And it's actually just like that easy that you can look at what companies you're interested in that are public, try and understand what they're doing, like what the financial analysis is, like listen to podcasts, read online, stay up to date with them, and then try and synthesize that information into your own opinion. I think from an introductory point of view, that was what was really helpful for me. And then similar to Alejandro, that's exactly what he said, is kind of like the way that I approach my own investing too. So just kind of want to touch base on that introductory aspect that I found really helpful.
Yeah, when I first started investing, I was surprised to see that some of the companies that I knew and loved were public companies. I was so used to hearing about not just the tech companies, but oil companies and things like that I didn't really have an understanding of. And then to see Nike and Ulta Beauty, like you mentioned, and these other companies that we see so often in our day-to-day lives just made it easier to feel like I had a grasp on that. Howie, what about you?
So for me, like I think about investing in a vacuum, but also like in the context as people alluded to in like your broader personal finances. So like first I would say for me personally, I've done just like a little bit of investing, but not like a lot of like money, if that makes sense, because of like my own financial situation. And I think that's like totally fine. I think whatever investing you do should like make sense given your own unique financial situation. But like the limited investing I've done, it's been like diversified, just like buying the market, as Alejandro mentioned. There's like a super small allocation that I have to like buying some individual companies. And that's like, in terms of the analysis you do for individual companies, as Zara mentioned, you really have to like understand the business. Like the key question you have to ask, or it's like two, you have to ask like, how does the business make money? And does it have like a sustainable competitive advantage? And really taking the time, like reading as much information as you can, speaking to like people who know about the company and the industry, that's helpful as well. You also like still want to retain your own opinion, if that makes sense, but just getting as much information as you can on how the company makes money and if it's like a sustainable competitive advantage, that's like it's easier to like buy good businesses and just let it ride for the long run than like really trying to like get super hairy with your analysis and try to out analyze the market, if that makes sense. So just like really taking the time to understand the companies. You can't like overdo it, if that makes sense.
Yeah. Yeah, and one of the things that you said sort of early on in your comments on that was allocating limited resources to investing. And I think one misconception that I definitely felt was that you have to have a lot of money in order to invest. And so public has fractional shares, and I know more and more companies are starting to do this too, so that you can invest as little as a couple of dollars and still just get a foothold, and as you all have talked about, watch that grow over time and add to it when you can, so that it's not this big constraint that young people face. Alana, is there anything that you want to add about your own approach to investing?
Yeah, absolutely. I think that what's really important, I kind of have three main principles that I use to approach the way that I invest. So really determining what my goals are, and then always thinking long term. And then the last one is just not getting caught up in the hype of companies and the news and things like that, because that's usually where maybe in the short term it can go right, but it's just not the best way to approach it. And I think a lot of times you can get, again, just caught up in this idea, and you hear all these words and all these different approaches and strategies, and it can get really overwhelming really fast. Like I mentioned, I don't have like a background in finance, and I mean, I guess unlike you guys, I never was a part of any of these clubs because it never felt like it was right for me. I never felt like that was like I would even be good at it, which is again why I started Rooted, and kind of what I do now is really trying to emphasize that there's no such thing as like a good company to buy or a good time to invest, things like that. And that is what got me started. And that was the way that I approached my investments at first. And over time, I've realized that it really is, again, about, I think echoing a lot of what everyone has said, is understanding the companies that you invest in, but also being really patient, which I think Alejandro mentioned. In my last newsletter, actually, I compared Warren Buffett's investment strategy to meditation, which like felt really silly while I was talking about it. But while I was writing, I was like, can I actually say this? I like asked my family, I'm like, is this okay to send to people? But it actually feels really right now, a week later. And basically a big thing that Warren Buffett does, and all these thousands of books that have been written about him, really just talk about sitting calmly, quieting your ego, and trusting yourself. And I like really love meditating. I love yoga and like that whole wellness side of things. I was like, whoa, this actually sounds super familiar to other things. And I was like, well, how does Warren Buffett's investment strategy somehow align with my, like headspace practice in the morning? Like, this is kind of unreal. So it really made sense for me. And even as recently as last week, I was like, oh, I think this is my investment strategy as well, is just trying to quiet the noise, and again, not get caught up and not feel intimidated. And then I guess the last thing that brings me to, which was my first principle, is determining what your goals are. So again, Warren Buffett is a billionaire, right? That's not necessarily what I am aspiring to be. And I know that, again, just from this whole process of learning and figuring myself out through investing, and knowing that what I really want is just to be, financially stable, to be able to support myself, support my family, and do the things that makes me happy. And I think a lot of those kinds of ideas are sometimes not talked about because we're all in such a rush. And even myself, I get caught up in this too. Like, we're in such a rush to make the money, to kind of get rich quick, like that whole idea. So I really try to remind myself of that. And that's my approach.
Yeah, it sounds like a theme in pieces of what all of you have said is finding ways to make investing less intimidating, to make it feel like something that you can belong in or participate in. And so thinking about just the current culture of finance and investing, I'm curious what your takes on it are, especially considering that when you think of stereotypical investors, when you think of the Warren Buffetts, you're not necessarily thinking of college students and young people. So I'm curious just what you view young people's place in this industry. Zara, do you want to kick this one off?
Yeah, for sure. So, I mean, I think from my perspective, having been in like that line fund is kind of representative of the traditional, I think, college students who are going to become, I guess, like stereotypical investors in the sense that they kind of know from an early age that this is what they want to do. And then on the other hand, now being president of Columbia Women's Business Society, I think I see kind of two sides to it, especially just within Columbia's, I guess, like finance culture speaking to it. I think the biggest thing for me is just recognizing that the largest difference is that I think there's just much more confidence from like, I guess, like what you would think about as like the stereotypical investor versus maybe people who don't see themselves in that role, or they don't actively see themselves investing at a certain age. And I think that all just comes down to like accessibility and the conversations actually happening, which is why at CWBS, while we do like career panels and pre-professional and workshops and LinkedIn like workshops and stuff like that, I think that while it's really important to talk about like pre-professional nature, how to start a career, create panels for all of that, I think CWBS has recognized that at least amongst women at Columbia, there isn't as much discussion about investing. What does it mean to be like financially healthy? What does it mean to set yourself up for success in the future when it comes to investing? And so I think that's why now, like through CWBS, we're having a lot of these conversations that other clubs just don't really have on Columbia's campus. And so I hope this kind of galvanizes the rest of campus to really open up and like fully talk about what is investing and like really make it as transparent as possible, invite people to come to these events and not kind of make it something that's, I guess, like internally focused or something that like financial economic majors only speak about. Because like any major, I'm double majoring with art history. I think people in art history should be thinking about like investing. Any major, it doesn't have to be quantitative. I think it's important to just like have some sort of introductory understanding, which is why with Columbia Women's Business Society, which is like a broad kind of business focused society, we're trying to like start that conversation.
Alana, you had mentioned also that you didn't join an investing group on campus because you weren't sure it was for you. I'm curious if part of that speaks to what you were feeling too.
Yeah, I think for many reasons, I felt like I wasn't interested in finance. That was always, I guess, the way that I told myself, or the way that kind of this whole idea of investing and money being intimidating ended up being the way that I explained it to myself, was that I wasn't interested and I don't really like care about that stuff. So I definitely think, at least going back to this idea of why it's so important for young people to be investing and what it really can do to make change is, well, one, even if you're not studying finance or interested in money, quote unquote, which was again something that I really felt, money is always going to be a part of your life. And that was a huge reason why I started what I'm doing, because a lot of my friends are studying public health and want to be doctors and things like that. And our conversations were always about our goals and our dreams and all these things we wanted to accomplish. But the piece that was always missing in those conversations, but was very much at the end of the day what would sustain any of those goals, is money. And that was always missing. So I think for a lot of reasons, at least personal finance is, I think exactly, Zara, what you were saying is so true, that it's great to have all these, like pre-professional clubs and courses and things like that. But at the end of the day, you can do anything, but if you can't manage your money and you don't know that you can start growing it even before you become a doctor or before you do any of these things, it's going to be a lot more difficult to really get, very far. And then on the other end, with investing and with having young people really get in on this conversation, I think that a lot of times, again, we forget that, money really is power. So this idea of like not being interested in money, but let's say you're really interested in, women's rights, or in, ending climate change and fixing all these things that are really important to you. A huge way to make those changes is by investing in the companies that you believe in, and like this idea of voting with your dollars. And I think that, again, we somehow make this conversation about, we make it so scary that change doesn't really happen because it's just this like very select group of people that are spending and investing for their interests, which is why I'm really excited that we're even having this conversation, because clearly there is change and there are different people that are starting to become interested in this.
Yeah, I think one of the things that you were getting at, this idea, and I apologies, the sun is going down and totally changing the way my screen looks. I'm going to try and get closer and sort of block some of it out. There we go. Is that investing isn't just for the sake of getting rich, to have a lot of money in your bank account. And we have a section of featured profiles on Public, and one of the women who we featured, Morgan Devon, who is the CEO of Blavity Inc. She talked about how she took some of the money from investments she made as a teenager to start her company. And when you think about it that way of what can I do with this, it makes it exciting in a different way, and tangible in a different way too. Alejandro, I'm curious what you have to add about how you view investing and young people's place, and also just bringing more diverse voices to investing too.
Yeah, I mean, I think it was kind of already mentioned, like these are definitely very important conversations that we should all be having. Obviously, when money is involved, it can sometimes be a little bit awkward, but I personally love having these conversations with my friends, and really just putting the ego aside for a while and talking about where everybody's putting in their money, and any opportunities that they see. Because sadly enough, like the education system doesn't really teach us any of these things, right? And we have to really be proactive about our financial education. There's so much information out there. There's so many websites, so many courses as well. I mean, those are also great investments in their own sense, like paying for these courses and learning a little bit more about investing or just financial management, I think are really worth it. I think when a lot of these brokerage companies, I would say the historical turning point was when Robinhood came out and was really made it accessible for any retail investors to really get into the market, right? And there was so much liquidity being provided, and it is still like happening right now, and that's great. I mean, that definitely allowed a lot of people to really get into the markets, but you really just have to also be critical, and make sure that you're learning, and make sure that you're staying up to date with what's going on. And again, I think these conversations are the way to go. That's the sole reason why I joined the club, like the Berkeley Investment Group, having that feedback loop when it comes to investment. And I know Public is doing this in a way as well. It's extremely important, right? Because you might be looking at a company for a month, and you're like in love with the product or the service, and you start being a little bit more biased on that sense. And it's always great to like ask a friend, like, hey, what do you think about this? And they might be like, well, like I actually see X, Y, and Z on the stock, and you might be like, oh, I actually did not think about that. So I think those are great things to, those great conversations in terms of finance are always super helpful, and every young and college students should definitely be promoting and having those safe spaces to be talking about this. So, yeah.
Yeah, and you touched on sort of continuing to look at companies when you're investing in them, and how you had mentioned that early on in your investing approach of you can never really do too much research. And to turn this question over to you too, before we move on, I'm curious how being part of an investing club at NYU has shaped your view of the financial world.
Yeah, so I guess like I would first preface like my experiences. I think I've been very fortunate, like being able to join a lot of like good organizations during my time at NYU. And I would say like I only have like an exposure to just a tiny piece of the finance and investing world. So I suppose like my experience is definitely unique. But in terms of how it's shaped my perspective, one of the things that I was very like, I felt very fortunate to be in an organization that really like prioritized mentorship, in the sense that as a freshman, you like don't really know anything, but people are more than willing to like teach you jargon, like tell you like, oh, when Buffett is talking about that, this is what he really means, etc. So people who like show you the ropes, that's like really important. And when you have like an organization that really emphasizes mentorship, I think people buy into it, and they like buy into a pay it forward kind of culture, which is like intrinsically rewarding, you know what I mean? Like helping people out, you, even though like, you personally don't get anything out of it, it's like for the good of the organization, and it's like just intrinsically good. In terms of like my closest relationships are with like people in my organizations, like I'm friends, we also talk about investing all the time. So yeah, definitely I think as students and young people, we shouldn't let the fact that we don't have too much experience like deter us. I think there's a lot of like collective wisdom out there, and there's a lot of learning that we can do like together.
You mentioned jargon, and that's something that I hear a lot of questions about on a regular basis. And so I'm sure there are many terms that you found helpful to learn throughout the time that you've been learning about investing and whatnot. But what, Howie, is one term that you think is really helpful for people to understand? It can be anything.
Yeah, there's like an endless variety of like jargon. There's like industry specific jargon. There's all different kinds of thing. I would say a term that gets tossed around a lot is probably ROIC, return on invested capital. And there's actually like sub definitions of ROIC. You can calculate it a bunch of different ways. And it's important to understand, because fundamentally return on capital is a very good measure of how good the business is. Like a lot of times, if a business has really high returns on capital, that's good. But the next question you have to ask, obviously, is like, can they defend that? Like, what if competitors come in and erode their competitive position? But I would say fundamentally, like ROIC is a very good metric to know, because it's like very fundamental to the way you have to think about a company, and like the way you think about valuation as well. That's just like one of many. I'm sure everyone else can offer like totally different ones as well.
Yeah, Alana, is there one that you can add that that you've wanted to break down either in the past or in the future in your newsletter?
Yeah, absolutely. I mean, this idea again of like just compounding. I know again, like Alejandro touched on this idea of time, right? And I think everyone kind of mentioned that too. And just realizing the power of, compound returns, and that it will work out, and even if you don't know everything perfectly, it will hopefully work out in your favor just because you started earlier. So that's actually what I am going to be breaking down this week, because I think it's so important. And I've written about it before, but somehow, I mean, even I forget about the kind of this power of time and of letting things grow. I think it can be really intimidating, because it's hard sometimes to, like, I was talking to someone who is studying finance, and I was like, oh, well, I was talking about my newsletter, and I said, I love talking and explaining things like compound interest. I was like, I'm sure you know what that is. And I did that. And I had to stop myself. I was like, wait, maybe she doesn't know what it is. And she said, I've been studying finance, and we've never talked about that for whatever reason. Or she just felt intimidated in the moment that maybe she just wasn't aware of the exact definition of this term. So things like that, which can seem simple to some, even me, who very recently started learning these things, and I try to break them down in my own way. So yeah, it's a long answer, but I think just compounding, great term that I'm happy to know now.
It seems very on theme with what we've been talking about too. Alejandro, is there one that you want to throw into the mix?
Yeah, I would say the theme about like price versus value. I think people throw those words around pretty regularly, but I personally believe they're very different. Price for me is what you end up paying for, and value is what you actually and end up getting, right? And that's super relevant, I think, right now in the stock market. Like, you really have to be critical and understand what you're really paying for an asset or a company, and also like understand what am I getting for this price? Is it reasonable? Am I willing to pay up for this growth? Am I willing to pay up for this momentum, or whatever the thesis is right there on that stock? So I think having that really clear distinction of what really price is compared to what value is super important.
Yeah, I hadn't spent much time thinking about that, so that's a really good one. Sarah, do you want to close us off?
Yeah, I think I'm going to talk about two acronyms that I first learned about when I was applying to be in Lion Fund. One is the PE ratio and the other is EBITDA. And I think, at least from just following like Instagram accounts like that talk about finance, I think these like acronyms are spoken about often but not really like delved into, and I think that is another thing that can be intimidating, that there are these like words or really long acronyms being put together and you don't really know what they stand for. But when I was pitching to be in Lion Fund, the PE ratio and EBITDA are like the first two things I was trying to understand in terms of financial analysis. The PE ratio is price to earnings ratio, and then EBITDA, or it could be EBIT to earnings before interest, taxes, depreciation, and amortization. And so as like an 18-year-old who didn't really have any experience in finance, I was also pretty intimidated by those ratios. But if you just like kind of start, I guess, like getting your bearings and understanding that, okay, like this is really just a different way of looking at like net income, and price to earnings ratio is a way to just value the company and understand how it's performing. Like I think once you kind of conceptualize everything with the qualitative aspects of the business, then the quantitative parts don't seem as intimidating, at least from my perspective. So I think those were like the two things that I first came across a lot when I was new to investing. And then now it just seems like something I love, like just saying like the acronyms are not too hard once you just kind of like get your bearings.
Yeah, and I feel like this is a good transition into a question about resources to help you learn about investing. And I know there was a question that asked about books, but I would also broaden that to podcasts and newsletters, like you mentioned, Alana, things that you'd recommend to your friends and to other young people. Alana, do you want to kick us off since you have a newsletter to offer in that mix?
Yes, absolutely. So I think the two first things that, or the two books that I read that really impacted a lot of my, impacted my perspective and why I started this. The first one being Rich Dad, Poor Dad. Great book. Really helpful in understanding the power of investing and just what it means to really grow your wealth. I think it's also a great book because you can really get the idea of it like in the first like 20 to 25 pages, and then yeah, you don't have to really read the rest of it. Once you got it, you got it. It's great. And then the other one is The Intelligent Investor, which is definitely a little bit more dense, but again, an important read if you're dedicated to really becoming the best investor that you can be. You can read that. And the last thing is my newsletter, which I think will be linked somewhere, hopefully. And I really tried to make it as easy to understand and relatable as possible for our age group and for people who are starting to learn. As I mentioned before, I like to call Warren Buffett a yogi and do things like that that really just make sense for me and make me realize things about myself. So those are probably at least two books, my newsletter, and then Investopedia. If terms are scary, just look it up on Investopedia. Great resource. I'm sure they'll have some other good resources.
Yeah, and we've linked to Alana's newsletter in the chat, so you can find that there. It is, she plugged it and I'll plug it for her too. It's a really fun way to learn more about things in I guess, a way that feels approachable and makes it fun to talk about something that can, otherwise be full of acronyms and things like that. Howie, what resources would you recommend?
There's like a ton of stuff out there. I would say like the news is obviously really helpful if you follow Bloomberg. CNBC is pretty good. I think CNBC is like free as well. In terms of like news, just like staying up to date on things, pick up like what people are talking about, kind of pick up how people talk about things. I would also say there's just like blogs. A lot of people have different kinds of blogs. I know a professor at NYU Damodaran. He has a pretty interesting investing blog. He's like an equity valuation professor, so he definitely knows what he's talking about. And I also find it super helpful to read like investor letters from funds. So I think Reddit actually always does like a quarterly like compilation of all the like hedge fund letters. Just like browse a few and read, see what's going on. In terms of like books, I would say one of the books I read early on was Margin of Safety by Seth Klarman, I think. That's like totally helpful. It helps you really understand what Alejandro was alluding to earlier, like price versus value. You don't want to like pay too much for something that's really not worth that much. You want to like buy something ideally like less than what it's worth intrinsically. But then again, there's just so much stuff out there. You can really explore a lot of different directions.
Awesome. And for anyone who's listening and doesn't have the chat box open, we're linking all of these there so that you can find them easily and don't have to remember what everyone's saying. Sarah, what would you recommend?
For me, I think I'm going to recommend some books first that introduced me to the idea. It was the Little Book of series. And I think there's like the Little Book of Valuation, the Little Book of Value Investing, the Little Book of Behavioral Investing. I just read through a lot of those that I felt kind of like related to me. I found those really helpful, but like wholeheartedly agree with some of the books that Alana mentioned. I think I love listening to podcasts to just like stay up to date on what's going on. I really particularly like the Motley Fool podcast. It's definitely the most like high energy podcast I've found. Like just speaking about finance, I think like kind of what Howie mentioned too, just like staying alert on the news, like just setting alerts on your phone, maybe for specific types of markets. I always get notifications about things, just given the way that I have my settings kind of set up. I think I really like the Wall Street Journal. And I think in terms of like just Googling, getting yourself like acquainted with the different terms when it comes to investing, I also like Investopedia. I think it's like a great resource that people just kind of should use to like, again, get acquainted with like some of the acronyms I was mentioning, but then also just like with some like introductory ideas when it comes to finance and investing. But I also just love Public and the way that Public kind of operates around like themes. So when I was first coming on to like just like what Public was, I thought it was really helpful to look at like the bucketed themes that are available on the website and then just kind of like going and doing my own research on those. I think that's also a really good way to get, I guess, like get your bearings when it comes to like themes and investing, different industries and sectors. But yeah.
That's awesome. Yeah, I felt the same way when I was first starting to invest, and I'm the community operations manager for Public, so I am on Public, but using the themes helped me sort of orient myself towards what companies sort of fell into different groups and things like that. And you definitely still have to do your own research, but it pushes you off on a direction. Alejandro, before we move on, what else do you have to add to the mix?
Yeah, I think podcasts are great for sure. I definitely like to stay up with any macro trends. I think that can also be important when it comes to investing. So there's this podcast I really like from a hedge fund manager called Macro Voices. The Intelligent Investor is another podcast that I really like. They discuss anything from like just pitching ideas and just business podcasts as well, and it's great. I mean, in terms of websites, one of the sites that I really use a lot, I would say, would be Morningstar. They just have a great variety of information, whether it's like premium stock screeners, analyst notes. They do have a premium membership, but I personally think it's totally worth it if you're going to try to take this to the next step and be a little bit more serious about investing. But I would say, I mean, there's other free resources out there as well, like Barron's, Molly Fool, Seeking Alpha. But I think you will have mentioned that it's definitely important to be critical about these resources. Most of the time, a lot of people can write their own opinions, and that's great. I think that's always a great stepping stone just to see where you want to look for an industry or a certain theme. But at the end of the day, and I think we mentioned it at the beginning, like you want to be able to like really block some of that noise out and come up with your own thesis, right? I mean, these are public companies. We all have the same information, but what really matters is what you do with that information, and that's what really separates the great investors. If you're actually like stock picking, right? So yeah.
Awesome. And I want to switch over to some of the questions that those who are tuning in have asked. And I think this one lends itself to another question that I had for you too, about all of your advice for people who are getting started investing. And someone wrote in about just being nervous around the stock market and trying to figure out when to buy and when to sell, and just sort of getting wrapped up in all those questions. And so I'd love to hear, Zara, if you want to kick us off just about how to sort of approach the stock market and investing, and what sort of mindset you find helpful for that.
Yeah, I think I can definitely understand the mindset of being nervous because, well, one, it is like an intimidating thing to think about, but then two, like there is a lot of risk involved. So I think like also knowing like your personal preferences for when it comes to risk, I think is a great indicator of how you're going to invest. Obviously, like don't do things that like make you anxious or like getting like opinions. Again, like if you hear someone talking about something, whether it's like the Motley Fool podcast I spoke about, newsletters, like maybe even something I should have mentioned earlier, Morning Brew. I love that newsletter just to get like kind of acquainted with what's going on. I think like drowning out everything else and really focusing on what you have an interest in intrinsically is the best approach to take, because you're going to know the companies that you like, especially from like an introductory level, way more than you're going to know about some company that like some website is telling you is a good reason, it's a good like time to buy it right now. So I think when it comes to like introductory level, especially if you're nervous, it's definitely best to go low risk. So don't choose anything that's like too volatile. If you're like reading in the news and it's saying it's like volatile and maybe you don't fully have like that financial analysis toolkit yet, I think that's a good like indicator of what not to invest in. But I think when it comes to just like broader, bigger companies that you might have like a recognition with, I think like Roku is a really interesting company, and I know a lot of college students just have Roku TVs and people don't even realize it's a really interesting company publicly. And so I think again, like bringing it back to what I said earlier about starting at a place where you are comfortable with the companies is way more important than like seeing whatever is happening in the news and trying to attempt an understanding of a company you might not be able to fully grasp. I think choosing from what you know, doing a lot of research, but then creating your own opinion based on your own risk like preferences is kind of the best way to go from an introductory level.
Alana, I'm going to throw this one over to you too, because I know you wrote recently about Warren Buffett as a yogi. So what can you add to how to approach the mindset that's valuable when you're investing?
Yeah, I think first of all, it's another kind of big thing that we're not really talking about not us, but when we talk about investing and we talk about money, we never really talk about how important it is that like to make mistakes, and that you probably will make mistakes. If making a mistake means like losing everything you invested or just picking a company that you no longer like, whatever it might be, that's such a normal process of it. Like for example, again, when I started investing, one of my guy friends was like, oh, this company's amazing, they're going to be releasing this blah blah blah, this like medication, and they're going to be doing this. And I mean, I invested in that company, and one, nothing has happened, and two, that was probably one of the first mistakes I made, was kind of listening to someone else and not really doing enough research. And it's okay, because that kind of brings me to my next point, which is don't invest more than you're willing to lose. Even if you're super confident that this company is going to do well or this investment is going to be really great, it's never worth, losing everything and not being able to take care of yourself first, right? You start investing once you're able to make sure kind of all these really key parts of your personal finance are met, and that you're able to take care of yourself. I think that's really important too. And that also gives you more room for mistakes, right? Because it's not everything you have, it's just the amount that you can tolerate. And then the last thing about being nervous, and I know that we've already talked about so many things, and if this were my first time really hearing about investing or about getting started, I would probably feel overwhelmed. And I think that's okay, because I really think that the stock market or investing it's a reflection of everything that's going on in the world, right? So that is super overwhelming. That's why there are so many different ways of investing and of doing things, because it's a reflection of like of everything. So it's okay to pick one little thing that you're really interested in, or to, you know, just go at it with this kind of calmer mindset. It's okay. You're probably not going to make money. Like, it's not a get rich quick scheme. It's really going in it for the long term. And I think that it's taken me years to, and I'm like still working on it, but it's taken me years to really understand a lot of these ideas. Even like I mentioned, like, you know, this idea of compounding. I had read about it and I knew the definition of it, but for it to really make sense, sometimes just takes time, and your brain kind of has to like absorb the information, and something has to happen in your life where you're like, oh, okay, that makes sense. So stay calm, just start investing and make a mistake, but it can be a $5 mistake or a $3 mistake, especially with apps like Public, which let you do that, which I think is really cool, and why I love the app, because it gives a lot of room for trial and error.
I think what you said about mistakes is so important, because we talk about normalizing conversation about finance and about investing, and that doesn't just mean celebrating our successes. It also means talking about the companies that we thought were really cool and then something shady happened with their leadership or something like that. And you know, maybe that's a great topic for another time, since I know we're running out of time. And so one last question that I want to ask you guys that came through the Q&A is about focusing on certain sectors or diversification. And I know this came up a little bit early on. And so we've talked about both diversifying, and we've also talked about investing in things that you're confident that you know about. So how would you approach that diversification concept or investment strategy while still bringing the informed, researched mindset that we've talked about being important? Alejandro, can you speak to that?
Yeah, absolutely. I think that's a great question. I think it really depends on what your goals are. Again, it really comes down to how much risk you're willing to take. I think I'll just go with the ETF route here and say that if you want to invest in a sector, there's definitely like industry ETFs. For example, I feel really strong about like cybersecurity and semiconductor companies, right? I'm still like learning all the technicalities behind all that software and what goes into the semiconductor. So it might be easier, instead of like individually just picking a stock, you might as well just buy the whole industry, right? And again, especially if you're young, this is the time to be taking those more like risky bets that are definitely going to play out. And in that sense, if you're buying an ETF related to an industry, you're already being diversified in a sense, right? Because you're not buying, maybe in the semiconductor space, you're not buying, let's say, NVIDIA or Advanced Micro, like all those companies that tend to be pretty volatile. And you just buy the whole index. So that's a really great way to get that exposure. I feel like once you start having a little bit more interest in a sector, and you feel way more confident about your abilities, and learning the technical aspects about a technology, then you can really start looking at the companies. But I think it's always great to really get a sense of the industry dynamics. I mean, semiconductors are known to be cyclical, right? But that's like changing. That's like a huge thing that you have to know when looking at this company. So that's just one example that I'm looking at. But I think it's always great to look for things that you feel passionate about, because the research just comes pretty natural, and the interest and the curiosity there also plays through. And definitely a great way to invest, especially if you're young.
Awesome. And Howie, is there anything that you want to add about, thinking about how to either focus on a certain sector or when to diversify?
Yeah, no, I think Alejandro covered it like pretty well. I would say there's definitely not a one size fits all answer. I think for like the average person, definitely just diversifying across industries, across asset classes, that definitely makes sense. Once you like dip your toe in the water, so to speak, and you start to like really do your own research and like get up to speed on different industries, industries that interest you or that you think are like undervalued, then you can kind of focus on specific industries and specific companies. But I would say it makes sense for most people to start out diversified, and then, you know, as they like get more interest and like acquire more knowledge, they can like choose to focus on specific interesting things.
Great. And we have just a couple minutes left, so I'd love to ask you all just one last sort of rapid fire question, which is what is the best or most memorable piece of financial advice that you've received? And Alana, I'll start with you.
I have to think for a second, but I think the best advice I've gotten is, again, this idea of it's okay to make mistakes, and there's no possible way to know everything, and you will encounter, or but this is at least what someone told me, but I really guess now preach it to other people, is that you will encounter people who claim to know everything or appear to know everything, but no one does. I think it's that everyone doubts themselves, even with their investments, and people can have like the perfect strategy and have you know, all this like really great technical background, but at the end of the day, it's one, really hard to beat the market, so you know, it's okay, and two, that it's just a learning curve and you'll learn, but the earlier you start, you're just more likely to do better. So that's probably the best advice I've gotten that I now turn into advice for other people.
Yeah, and if others want to turn into a piece of advice that they'd like to share with their peers, that is totally fine too. Zara, what about you?
Yeah, I think so. When I started at Lion Fund is a value investing fund. And so I think for a lot of people who kind of think when it comes to investing, you think you have to like do rigorous financial analysis and you need to like present the company as undervalued. But I don't think like that's always the best way to go. And I think sometimes that's where the intimidation kind of occurs, because you do have to have like substantial financial analysis to argue whether or not a company is undervalued. I think looking from maybe the perspective of like growth investing, if there's like a new company that you follow that just recently IPO'd, or even just like from the perspective again of just like making sure that you are familiar with the companies you're choosing, and having an understanding of their business, in my opinion, is like more pivotal than doing as much financial analysis as you could possibly do. Because if you don't have that comprehension about why the business is going to succeed, what their competitive advantage is, then there's kind of like no point, in my opinion. So I think again, like the best financial like investment advice I've received is to really like initially focus on what you know, focus on what you can understand, and then focus on it being like to your personal like risk preference. I think everyone like has different risk profiles, and that's something people really talk a lot about. And I think what Alana said, like don't invest more than you're willing to lose, I think that's a really, really great like mindset to have. So those are, I think, the kind of just key factors that really influenced my initial steps. And I think it's just a great framework to kind of go forward with when you're just starting out.
Great, thank you. And Howie, what about a piece of advice that you've either received or would like to give others?
Yeah, I think it's been touched upon a lot, but taking a long-term view, like truly long-term view, like not like 2 years long-term, but like 10, 20, 40 years long-term. It's very hard to see the merits of that advice like in our shoes. But I think definitely like having patience, as was like discussed previously, and also just being comfortable and not doing anything that you're really like uncomfortable with, like don't risk more than you want to lose. Those are just like really crucial key pieces of advice, in my opinion.
Awesome. And Alejandro, we'll end with you.
Yeah, I think just really quickly would be, I mean, start now. The best day to invest was yesterday. The second best day is today. So you really want to do it once when you're young, have that long-term horizon. And in terms of financial education overall, just be proactive about your education. Be willing to learn. I personally never took any like formal accounting or like finance class, and everything's out there. Like if you're really willing to put in the time or have at least some sort of curiosity, you can easily learn a lot of this material. So just don't be fearful, and be willing to make those mistakes as well, as you guys mentioned, and have fun with it. I think that's also really important.
Awesome. Well, thank you to you four for taking the time to have this conversation. And Thank you for everyone who has tuned in too. So we will post in the chat, I think it's there already, but a link for anyone who's new to Public to claim a free stock slice when they sign up. And hopefully we'll see some of you on the app to continue these conversations. And we hope we'll see you at another Public Talk event soon. And in the meantime, you can find us on Twitter @Public and on Instagram @PublicHello. And we hope we'll keep having more of these conversations about how we can all improve our financial literacy and involvement in this world. So thank you all again, both for joining us and tuning in, and have a great afternoon and evening wherever this finds you in the world.